This is Agriculture Today. We are beginning today's show with our weekly grain market update, and joining us for that, as always, is K-State grain economist Dan O'Brien. So, Dan, thanks for being here today.
Thank you, Samantha. I appreciate the opportunity.
Absolutely. So, today we wanted to kind of highlight, I think the general theme will be that obviously planting is starting here in the US, and that's going to start taking precedence in what we see in our markets, I think, right?
Yes, in terms of the factors that will be in the minds or on the focus on the radar of market analysts and participants in the grain futures markets, they'll tend to be watching planting progress, the amount of moisture we have, the any either good news or bad news that comes into play. Now, for the last several months, we've been watching that same type of thing down in Brazil, Brazil and Argentina. But now when our planting season is coming up, we'll take on more of a domestic focus, I think. And with that, you stand back and just look at this situation, and we generally have decent moisture in the eastern 2/3 of the United States. Lots of moisture, too much up in the northern plains, but we're still dry here in the west. And gosh, Samantha, this is a replay almost of last year. When we had the same situation develop and turned dry out here in the west. And to me, I think it'll behoove us in coming weeks and months to watch what basis does here in what our basis being the differential between local prices and the Chicago Board of Trade. And if we continue to have dry weather, I would think it would lead to stronger basis than our local differentials in our prices relative to the rest of the U.S. than we're seeing at this moment.
Sure. So a bit wider margins there, like you mentioned, that we might see between local and then kind of wider prices that we look at on a regular basis. And, you said we're kind of at the same point this year as we were last year, but I would say the compound effects that we've seen, we're in a worse place this year than we were this time last year.
Well, we are. And from I guess having tight stocks, tight supplies, and then start coming, at least at this point, moving into that same situation, we don't have much in the way of carryover stocks to guide us through. So I think that even though we're not talking about cattle today, that the people I hear and hear from or hear about most are the people with grass and just not having enough forage available, having to look at a second year of this, sell down cow herds. Of course, that affects what I'm interested in for sure on hay markets, and that same dryness is a looming specter out there when we start talking about planting corn, planting grain sorghum, planting soybeans, sunflowers, and harvesting wheat in the next 1 or 2 or 3 months.
Sure. Well, I'll share that there is some optimism today in our later segment with Chip Redmond. So stay tuned for that, folks, because there's a bit more of an optimistic outlook on the horizon. It might not be the overnight difference maker, but it's something.
Yeah, if he's talking, we have read, now the grain market is watching the weather reports. So what Chip says and what others say is a big thing. I have read some reports that it looks like at least the latest official government statement that come out with that chances of La Nina reemerging stronger coming in May, et cetera, going forward, and that may be taking the lid off a little bit on some of our dryness. That would be just extremely welcome. But the point now, though, is that farmers have to, I guess, plant by faith and hope it comes up, so that when that moisture does come, hopefully later on, that they'll be able to benefit from it.
Absolutely. Well, Dan, now that we've kind of given an overview of what we're kind of going to discuss today, let's get into really our usuals that we discussed at the beginning, our futures and then cash prices.
Yes, recent trends in corn and in soybean markets have been generally sideways to a bit higher. It's interesting that to me anyway, that corn closed yesterday 663 3/4. It had been as low about 2 or 3 weeks ago, in early March, a 610 got up to about 685, closed to 663 and thereabouts now. So that, from a corn producer's point of view, is a pretty positive thing. On soybean side, also some strength has been revealed. Of course, the big low came again about mid-March at about recent low at about 1405 thereabouts. Got up to, since that time, about 1530, and that has been hanging right around 14.95, $15 on the May contract. So that's generally been a positive thing. Wheat had been pretty strong, jumped up to just under $9, closed down to 840 right now, and it's a challenging, puzzling issue. We have the Kansas Wheat Tour coming up just within a few weeks, and I really wonder what those folks will see when they get out in the country here to the west. Some moisture has come, and that's surely welcome. I think it's a question for Romulo, Lulato, and our other agronomists to wrestle with the idea of how can moisture that would come now help plants that have been under so much stress to actually recover it, and what's the probability of that happening? And the U.S. hard red winter wheat production for this year, and the market scenarios going forward, whether we're tight or not, will likely depend heavily on the answer to that question.
Sure. Yeah, those wheat tours coming up, fast approaching, I think, on the minds of many here at K-State in our extension offices. And I know those are currently being scheduled and I think are soon to be released. So stay tuned, folks, for those times.
Yep. And in terms of other issues, just to hit on a few things happening, we're still looking at, well, for corn markets, still the overall world and U.S. situation is still relatively tight. The USDA projections have been optimistic for this year, and I think the market's paying attention to those optimistic projections. But I guess the latest numbers that have come out are world minus China stocks to use at about 10.3%, and that's near historic lows that we've had of late. The cash prices last year averaged $6.60 per bushel. The USDA's projected $5.60. You look at the futures right now; they're projecting for the next marketing year about $5. So we have some real differences of opinion that have come about here. And for the, I guess from a similar point of view in the wheat market, the USDA is projected about $8.50 for this coming marketing year, starting June the 1st. We were at $8.90 last year. You look at the futures now, and they're projecting for this coming year about $8.15. So again, a real differential in opinion on where the markets are going. For soybeans, a similar situation. You look at this current marketing year that we're in, about $14.30. Tremendous price for soybeans. But USDA is projected for this coming year $12.70, and that coming year would start September 1st. And that's not too far off of what the futures are projecting. They're projecting about $12.84. So generally, the overall issue is that keeps repeating itself, is that we've come out of a high price year. Overall, it seems that the markets at this time are anticipating dialing in better crops, higher stocks to use, and I think for the overall farm sector, we're hoping for those bushels to be produced. But if not, then their price expectations are pretty low. And from May through May, June, July, and August, we'll be wrestling with that uncertainty and looking at the financial implications on the farm sector in the U.S. and Kansas based on that outcome.
Absolutely. Yeah. Something that, we always look to the futures for some sort of guidance, but just a reminder that they're not always fully accurate in these situations.
Well, they're not fully informed, and right now, so their assumption is that we'll have good crops. And I think in most years that's a very, very good assumption. But right, I guess for us in Kansas, when we see such dryness in our neighborhood, pardon me, it's hard to be to not wonder about the possibility of that assumption being wrong. So I like I say, we'll be watching planting progress, the health of the crop, et cetera, as we go forward. One thing that has to certainly be overcome is just dry soils. Recent I'm sure you've talked about this with other people from K-State, but when you look at percent topsoil, percent subsoil rated good to excellent, it's pretty stressed right now. The strong majority of our topsoil and subsoils in Kansas anyway, and in these western states, central and southern corn belt are pretty dry in a dramatic fashion. So we do need moisture coming, and not just a little bit. We need a fair amount in a consistent basis, and hopefully we can refill the soil profiles and end up with good crops and our best outcome over time. And I know, again, we've talked about this, is when we have lots of bushels and decent prices. That's when we tend to make the most money in farm country. High prices can mask a real shortage of bushels from a drought or whatever. And so we're hoping to avoid that outcome.
Sure. And you're talking about local conditions. So is there anything locally that we should be watching market wise in the past week or so?
Well, I think new crop bids for corn, as we kind of wonder about where the markets might go this fall. You've got the strongest bids, of course, in Garden City, at least as of on yesterday's closes on Thursday, the 20th, $6.13. That's a 56-cent basis, positive basis of that forward contract price being above December 23 futures. And compare that to a place like Salina at $5.42, where the new crop forward contract bids are 16 under. So you've got a real differential. It's based on Southwest Kansas being a market center with lots of livestock feeding and some ethanol plants. So and around the state, you also see pretty strong prices in Hutchinson with a positive basis, and in Colby. So there's still I guess the signals are still being sent to ag producers that we certainly want you to plant these crops. We're giving you a pretty good forward contract basis, and to see something positive is useful. For wheat, I think that's the next crop we'll be harvesting, of course. New forward contract bids for new crop. Strongest bids are 792, 791, and that's pretty consistent. Topeka, Garden City, Hutchinson, Colby just behind us, 785, Salina 783, even Columbus at 769. So pretty good prices. But again, the issue there will be more the bushels, and our producers willing to forward contract and tie in commitments to deliver bushels when they have such uncertainty out here in the field. And that's really the conundrum on wheat at the moment. And I would say grain sorghum prices, cash prices have been strong, and as we've seen in recent weeks, a place like Topeka and all places like Topeka and in Salina, the actual cash price for grain sorghum right now is stronger than corn. So that, to me, that's indicative of some export demand, probably that's coming into those major terminal locations and giving us some positive things to look at. So what's happening locally? What's happening locally is that farmers are scrambling to spray and get ready to plant, and oh yeah, the market's there too. So it's as often happens, some good price opportunities come when not many people are watching. And so I wouldn't be surprised if we'll get some spikes and some opportunities in coming weeks when farmers are just busier than all get out trying to produce a crop.
Well, we appreciate you joining us to share this information in such a fast format, so it's easy for producers out there to learn everything that they need to. So thanks so much for joining us today, Dan. I appreciate it.
Thanks, Samantha. Appreciate it.
Absolutely. Once again, everyone, that was K-State grain economist Dan O'Brien joining us for this week's grain market update. We'll be back with more ahead on Agriculture Today.